Alrighty, folks, we talked about doing the Magnificent Seven in video number 2 today. We've already hit NVIDIA, so we've got 6 more to look at. And why not? Let's look at what September historically looks like, because we are 4 short days away from September. The one and only Mr. Dan Bird. How you doing, sir?
Good, good. I'm actually going to do the Magnificent Seven plus two.
Oh, all right. Well, let's get it rocking
So
and rolling. What do you got for
there's
us?
two other ones that are not in the Magnificent Seven, but they're important ones too. So we'll look at those.
I'm ready.
Like Netflix and AMD.
Ah, of course. Okay.
All right. So welcome. By the way, I don't think I mentioned while we were live last week, but congratulations on hitting 50,000.
Oh, thank you very much. I appreciate that. Yeah, 5 years in the making. It's quite the accomplishment. I had no idea we'd ever get here, but it's
Awesome.
a very cool feeling.
Yeah, it's great. And I think you built a really nice community too. I mean, I watched your videos with other folks, both on stocks and mostly on real estate. And it's very enlightening. It's great to hear different perspectives from different areas, mortgages and flipping and lots of different things. So it's a pretty wide, diverse group of folks that you talk to.
Yeah, the beauty of the channel is that it's not me. It's a collection of 8 to 10 other millionaires. And most importantly is they're all doing stuff. These are not theoretical. These are not wannabes. These are people that are in the business. Sometimes they win, sometimes they lose.
Right. Yeah. And that is the business. That is the business.
Yeah. So I'm ecstatic that we've gotten 8 to 10 millionaires that give me an hour, right? You give me an hour every Sunday, which you don't have to do.
Right.
But it's a great feeling to watch us grow.
Yeah. And it's and I think your other folks that you have on would echo this too. It's fun for me, but it also keeps me sharp as well. Talking about these things and then getting your feedback and having a two-way conversation. Because as a trader, especially real estate, not so much, because you are talking to people in real estate. But as a trader, you're sitting at your screen all day.
Yeah.
You're not really getting feedback, so you have to build up your own personal philosophy and psychology, the psychology of trading.
Yeah.
You've got to be willing to take the losses and know when to get out, and because the only one you can beat up is yourself. So
yeah, exactly. Well, yes. Well, thank you for being here. You are a must-watch video for folks on Sunday. I don't know if you know this, but of all my guests, you are the only guest where both your videos go out on the day we record. Most people will get one video a day, 3 days in a row, but people love your stuff. So usually you get one at 5 p.m. and one at 7 p.m. Pacific. So it's a little tidbit for you.
Well, that's good to know. Yeah. That's sometimes I go in and read the comments and everything. Yeah. There was one guy that had some interesting comments about his take on the market. I don't know if you saw my response on that.
I don't.
But I said maybe you and I and Zuber could get together and have a video chat about.
Let's do it.
Because some of his are similar to mine, but not all of them. So
I love it. I love conversations where people don't agree but are respectful. I think those are the best kind.
Yeah, I agree completely. All right, let's take a look at first off, if anyone is interested in getting my newsletter, which I send out. I don't send it out anymore starting this weekend, but I put it on the website as soon as I finish it, which is usually around noon Eastern time. So anytime after that on Saturday, you can just go to the website and download the newsletter. So you'll have it right away. But the first thing I want to talk about is Stock Traders Almanac. Every month, usually the end of the month, they put out a historical perspective of the next month. Historically, going back, 21 years, and in pre-election years, it goes back to 1950. You can see what September looks like, and the pre-election years are the dotted lines, and up until September, they have diverged somewhat from the solid lines. In other words, the pre-election years have been higher than non-pre-election years. But in September, they don't. In September, they pretty much converge.
Yeah.
And are all in agreement. So, and then I put in these dates here so you can kind of put, because they just put the trading day, how many trading days in the month. And then I insert where the weeks are, where the weeks fall in those trading days.
Right.
And then some other interesting things like non-farm payrolls is on the 1st. Labor Day, the market's closed on the 4th. CPI, the next report is on the 13th. That will be an interesting one. I think it will go down slightly, but not dramatically down. I mean, it might not even get back to 3. So we might get to 3.31, something like that. We'll talk about that before that, the week before that. Then options expiration is on the 15th. That's very early this month, actually. But you can see what happens with the market right after options expiration. And September, by the way, is the worst month of the year in the market. Historically, the month of September is the worst month of the whole year. And you can see here, you know, right after options expiration, the market just kind of crashes down. So caution is advised. I think that head and shoulders that we talked about on the last session that we just did, that's going to be very critical. We're probably going to know whether we break down below that support level sometime before non-farm payrolls, so sometime next week. So when we go into this non-farm payrolls, the market might already be correcting.
Right.
We'll see. All right, so that's what it looks like. By the way, I've had a few people. One month or 1 week I didn't put 1 month I didn't put this in my newsletter, and the subscriber sent me a note saying, "Why didn't you put the next month?" I love getting those every single month. I take those and I compare them to the last month. So I put it in the newsletter at the end of every month now. All right, so let's look at. I'm gonna, before we look at the Magnificent Seven, there's a couple of things I want to show in here. First of all, I put this in the newsletter too. This is what happens with stocks after Jackson Hole. You see last year and 2019, huge sell-off.
Yeah.
But normally there's not really much reaction. Just those two outliers. But the one that's really interesting, and I did not put this in the newsletter because I think it needs a little thought. You can't just take it based on what the image looks like. Okay. So the first thing is the lag effect of GDP. That's this one right here. Let me see if I can make that any bigger.
Oh, that's helpful.
How's that?
Yep.
So the lag effect of GDP, this is the change in GDP. So you can see Q3 is what we're coming up on. This is Q4 of 23. So this actually shows GDP dropping as a result of a 5% point increase in the Fed funds rate. All right. So this doesn't take into account anything else. That's why I say I didn't want to put it in the newsletter, because you have to really think about this.
Right.
This does not take into account anything else that's happening in the economy. That just shows you, historically, what happens with the lag effect of a Fed rate hike of 5% or more.
Got it. Okay.
And the lag effect usually takes what, 1, 2, 3, 4, about 4 quarters to really play out in GDP.
Right.
So it's really a year from now before we might see the result of this. All right, this is Q3 of 24. This plays into what I was saying before, that I think at that point, around this point, or Q2 of 24, the Fed is going to start cutting rates. Because that lag effect is going to start catching up. Now this one again is one that takes a few minutes to really understand. The first thing you want to be drawn to is this big, huge green hump right here, right? This is personal savings. So this is a chart of savings.
Okay.
The green, though, is basically the cumulative difference versus the trend. And that's why it has this big, huge hump, because just like I showed you on that M2 chart, when the economy shut down because of COVID back here in 2020, everybody was saving. Nobody was spending. So yeah, compared to the trend, you can see this dark blue line, how far above the trend it went, which is apparent in the M2 chart that I showed too. So yeah, that big green line that big green hump should appear right there. But that's not the thing to focus on. The thing to focus on is this dark blue line, because that is personal savings. And then compare it to what the trend has typically been. You can see before COVID, it was following trend. And then savings dropped below trend.
Right.
Right. So if you're looking at this chart, it's telling you that people are going through their savings and starting to use credit instead. Now, the other thing I see on this chart is that savings is starting to creep back up again.
Right.
Back towards the trend. So we'll see if that continues or not. But this could be a major factor as determining whether a recession occurs or not sometime next year. Right. Is are people really going through all of their savings, and are they not replenishing it at all? We'll see. So just thought that was interesting.
Okay.
All right, so let's take a look at the Magnificent Seven. I'm going to just look at each of the charts, and we can look at them in a number of different ways. But on the website, I've got the Magnificent Seven plus 2. So I added Netflix and AMD there at the bottom. And we'll just go from, these are alphabetical, the top ones. We'll just go from top to bottom. So here's Google. So the thing to watch on this is how far away is it from its 50-day moving average? That's the red line. And where is it compared to the recent resistance or support? So you can see Google broke through resistance for one day, and then it came all the way back and is right at support, but it's above its 50-day moving average. So the thing to watch here, and you can use these if these are the stocks that you'd like to invest in. If you want to just stick with the big ones like this, the Magnificent Seven, and you want to figure out where to get in, then I would say don't get in when it has this big, huge spike like this after earnings. Right. It's too late. Wait for it to come back to the 21 or the 50-day. The 50-day is where all the big traders usually add or open positions. So as you're watching these, watch when it starts to come back to the 21, which is the blue line, or if it comes back to the 50, those are good places to add. Okay, so here's Amazon. Amazon is right on its 50-day. I drew in the negative divergence whenever I see it here. So this is telling you that the rally was running out of steam. So this has come back to the 50-day, and it's right in between these two resistance and support levels right now. So these are all going to be really important. If that head and shoulders on the NASDAQ plays out, then all of these stocks are going to drop. So then you have to watch to see if it drops through this very important support line right here. If it drops through that,
I gotta tell you, you're not making me feel all warm and fuzzy. Usually, you make me feel all warm and fuzzy. I think you're setting me up for Michael. We got some pain ahead. That's what it kind of feels like to me.
Well, I am not Powell, but if you read my newsletter, that is a common theme. I have my own commentary of what I see, and then I pull some things from other subscriptions that I have or other things that I read. And if you read through all of those, you will see a common thread through all of it.
Be careful.
Be careful. None of this has confirmed yet.
Correct.
I want to make that clear.
Yeah, it could reverse in a heartbeat. Yeah.
Right. It could reverse and just head back up. But they all look like they are ready to break down. Let's look at Apple. Apple's already below its 50-day moving average.
Ooh.
Went down and hit this support level right here and started to come back up, and notice that it hit the 21-day. Remember, that's reversion to the mean. Hit the 21-day and then started back down again. And it also had a negative divergence. So not good for Apple. Next one is Meta. Notice over here, under earnings beats, Meta last week was in the top 10, but it dropped out this week out of the top 10. So Meta now is below its 50. So one of the things that I look for, and I'll go back and review this in a second, but one of the things that I look for is if a stock has had a really good run, which Meta certainly has all year, you can see it goes up, comes to the 21, 21 bounces, 21 bounces, 21, 21, 21 right here bounces, 21 here, but it dropped through. And then the next level is the 50 and it dropped through that. So what I look for next is after it goes through a major one like the 50-day moving average, it will normally come back up and test that major one again. So what I want to see is when it tests it, will it go through it or will it get rejected? And if it gets rejected, that confirms the weakness.
Okay.
So again, it's just sitting right on this support level, but it went up to the 50 and got rejected. That is not a good look.
Okay.
Microsoft. Again, below its 50. So it's also had a nice run, came down to the 50 and the 21, bounced, 21, 21, 21, went through the 21, tried to hang on to the 50 right there and dropped through it, came back up to the 21. And then on that same day, that Thursday after the NVIDIA news, it did the same thing that NVIDIA did. It gapped up right about to the 50-day moving average and then got rejected. And now it's below the 21 again. So again, not a good look.
Yeah.
NVIDIA we looked at, but we'll look at it again. So here's NVIDIA. NVIDIA all the way back here, beginning of 23. Came up, hit the 21, the 21, 21, 21, 21, dropped through the 21, through the 50, came up and tried to get back above the 50. And then we had earnings, and just before earnings, it ran up really nicely. But now it's sitting right above the 21 again. So this is a critical time for NVIDIA. Will it drop through that? If NVIDIA follows the rest of the market, if that head and shoulders pattern actually plays out and NVIDIA sells off along with everything else, because everyone's going to be selling, then it's very likely it could come down to this major support level down here around 375, 380.
Okay.
So we'll watch that. Next is Tesla. Tesla already below its 50-day. So came down, it didn't even stop much at the 50. It just went right through it. It did hit this major support level from back here and bounced on there. But you see where it's at. It's right at the 21, reversion to the mean, which is also right at this resistance level. So we'll have to see. It had a good day on Friday, but it still did not get back through the 21-day. So we'll have to watch that. If that one, again, gets rejected with the rest of the market, then it'll probably drop back down here to 160, somewhere on that level. These are all good buy points, by the way. So people that are in cash should be watering at the mouth for this to happen.
Yeah.
I still, by the way, think that we're going to hit new highs by the end of the year. So if all of this if all of this comes true and this does go down here and that head and shoulders executes, then when it gets down here and it's somewhere in the middle of October, then I will be buying hand over fist.
Okay.
Netflix. Netflix is below its 50, came up and tested the 50, got rejected. Now it's testing the 21. It's right at a support level that it's actually hit 1, 2, 3, 4 times now. So if it breaks through, that's about 410, right about the 410 area or 400 area. If it breaks through that, then it's probably headed down to this support level down here, which is 370. Okay. But again, it's below the 50. So it's a lot of these are below their 50-day and they're not recovering the 50-day. And then finally, AMD. AMD doesn't look good at all. It went through its 50 way back here in July, mid-July. Tried to test it and get back through and couldn't. Got rejected. Tried to test it again with NVIDIA. Got rejected. And now sitting right on this major support at 100. And if it breaks through 100, then it's probably headed down to 85 down here. Which, if it does, I'll be buying it down there.
Go. Okay.
And you can see where the 200-day is too. On all of these, the 200-day is above, the price is above the 200-day on all of these.
Right.
So the 200-day will be basically the last line in the sand.
Right.
You can see this is NVIDIA is way above its 200-day. This is Microsoft. There's the 200. That's this dashed gray line down here. Meta is way above its 200. So from a long-term perspective, and if you're a long-term investor and you have any of these names, then all of this stuff here is just noise.
Yeah.
The only thing that you really should be focused on is this 200-day down here. That's the one that will tell you if the long-term trend has changed.
Right.
If it goes through that one. But I don't think it's going, I don't think any of these are going to get that far down.
Okay.
There's Google. All right. So that's
Very cool.
kind of my review. And these, by the way, on my website, they update in real time. So every day you just click on that and you'll see the latest. You can click on it in the middle of the day when the market's open and see what it's doing.
Nice.
Yeah. So these, all of these charts here, all of these names, they all update in real time. So if you want some ideas to take a look at, just to put in a watch list when the market turns around, you know, these are some good ones. The top 10 lists. I put the ones that are common across lists. If it's yellow, it's common across from the first one, is also in two other ones or one other one.
Mm-hmm.
If it's orange, it means it's in the second list and it's also found in the others. If it's green, and I've never seen a green one yet, by the way, if it's green, it's in all three lists at the same time.
Okay. Very, very cool. Well, Dan, I appreciate you here. Your website is amazing. I'm so glad you've dumped the email and now you're putting it here on the website. It'll be a very interesting week.
Makes it easier for me, but really it should be easier for folks too, because really they just click on one, they click on one button and it pops up.
It's so much easier, better, and you have so much around it for people to play with. The website's a place to go. Breakpointtrading.net, folks. Do yourself a favor. Go check it out.
Yep, and good luck. It'll be an interesting week this week. Jobs next week, so we'll talk about jobs next Sunday when we talk.
There you go. All right. Thank you, buddy.
All right. Have a good weekend.
Yep.